Global Leaders follows a specific style. We describe it as mega-cap quality. It's a style that John Maynard Keynes, as first institutional equity investor in the 1930s and 40s, started to use in an equally uncertain political and economic environment. The style features include a long-term investment horizon, also the mega cap size of the companies that invest in, as well as quality. And we define quality in financial terms as a growing cash return spread over cost of capital over time, which increases the sustainability premium of the global leaders, the industry leaders that we invest in each of the industries over time. In each of the 25 or up to 25 companies that we invest in, we really only take conviction views. In each of these companies, we look for industry leaders that have that sustainable competitive advantage to keep their leadership in the industry and also that benefit from financial strength. An example would be Visa, which in the payment transactions industry globally holds a very, very strong oligopolistic position. Another example, again in technology perhaps, would be Microsoft, where in cloud computing Microsoft has a very, very strong position with only one or two other names in the industry. But also in more defensive, brand-oriented industries, we find examples. For example, Johnson & Johnson, which in consumer health gives us a very good example of a strong leadership position that they have globally and have kept through their reinvestment in that leadership every year for a very long time. Ultimately, we want to invest in companies that through their industry leadership and competitive advantage can give us compounding total returns over the business cycle. And that means through their pricing power, they have higher revenue growth than their competitors. Through their efficiency and their procurement power, they've got higher margins, and also they've got a better cash flow growth return profile over time because they can make working capital efficiencies and make the right capital investments over time as well. So all of those characteristics together in terms of the overall offering of the portfolio and the fund really aim to give you a compounding sustainable return over time, especially bearing in mind that we obviously focus on fundamentals here. And essentially that means also reducing potential drawdowns in the offering and in the fund as we go into an environment which is potentially getting tougher again and is bound with more economic and political uncertainty. Well, for the last 10 years or so, really since the global financial crisis, we've seen extraordinary monetary policy that has had unintended consequences also in terms of the liquidity. And we are now starting to be coming to the end of this extreme phase of monetary easing. Fiscal policy at the same time is still prolonging and expected to prolong this cycle in the major economies of the world for a bit longer. But again, we are pretty much into the third longest US economic expansion in history. And at that point, we believe, one, fundamentals will become more important again, and therefore Global Leaders is very well positioned in that regard, really focusing on those bottom-up selection fundamentals of the companies that we choose. But also from a broader context, managing those potential drawdowns and the volatility in markets through selection of specific companies that can outperform through their financial strength and competitive advantage is becoming, in our view, much more important as we go through this last phase of this economic cycle.